Good day, everybody. It's Trent Klarenbach with Klarenbach Research. I want to look at interest rates, and to do that, I will look at the bond yields in Canada and the United States. The first chart we'll look at here in Canada is the 3-year government bond yields. That's what you're looking at. Take a look at how we're actually finding support from this 50% Fibonacci retracement from the low in October of 2020 and the high here back in October of 23. Interesting. Lows and highs in October. Interesting. When you see this kind of pattern play, I anticipate it rises up here another 20 basis points, maybe more, and then maybe we see a return down to this 61.8 Fibonacci level. We'll see if that happens or not. But that's what we're looking at. We're looking at a little rise in the short term and then followed by lower in the future. But we look at the 5-year yield here, and this is the monthly chart, so you can see that we are below this rising 50-month moving average here in green. If I look at the weekly chart, I drew this trend line on here. It's a best fit trend line, and yeah, you can see we're back above it. It'll be interesting to see how it reacts to this 200-week moving average overhead, but I would say these shorter term bond yields just don't look as bullish. I would say they're still in bearish territory, and but that remains to be seen. Interesting enough here, look at this triangle we had drawn here, and as you get closer to the apex of the triangle, you anticipate a break through this bottom trend line, but the closer we get to the apex of the triangle, the weaker that conviction comes, and often we get some failures. So we broke above, got a retest, so I'm actually going to reassess this. I think we're definitely going to go up here another 13 basis points, test this 200-week moving average, but it tells me that it wants to go higher than this, which is going to be interesting because I think it matches up well with the 10-year weekly chart here. So this is the 10-year Canada bond yields. It's broke above this trend line. It looks to me like it wants to go higher. I think we're going to see higher 10-year bond yields in the future. I think we're likely going to get up here and another percentage point all the way up to 4.5 on the 10-year bond yields. If that happens, then that's quite a dramatic increase, I would say, on interest rates. It's 1%, right? The 20-year longer term yields look more bullish, meaning they're going higher than the shorter term. So that's interesting. So you might want to consider that, locking in interest rates for the longer term. Take that, to have that consideration, have that discussion with your consultants and see what they think on that. Just an idea I'm sharing with you. I actually locked in some longer term rates here recently on a commercial loan that I have. U.S. 5-year government bond yields. Let's look at the 3-year. It wants to get back above this 50-week moving average. Having trouble with the mouse here. And this pattern node usually shows you, when I look at the monthly chart, yeah, you know what's forming here? I think we're going to see higher 5-year bond yields in the States too. If I draw this trend line here, and yeah, this wedge usually breaks out higher, and usually considerably. What you can almost do is measure the amount of the move. You can measure this move here from 4.5 all the way down to almost 0, right? So I think we're going to see significant increases in the 3-year government bond yields. 5-year, same idea. We could draw this other form. This, I guess it's a pennant, I guess is what it is. And again, we're likely to see 100 basis point move here shortly, but again, we're looking at 3.5%, maybe 3.6% move in interest rates, and that's quite significant. So let's put us up around that 8% interest rate on the 5-year. Return on the 5-year bond yields is likely transfers into your 5-year interest rates. 10-year bonds too. Look, you can do the same math. It gets us over 7% return and likely 7% on your interest rates. So be careful of that. I think we're headed into higher interest rates, and I would argue significantly higher interest rates. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.